some of the major use cases which have now we are seeing most traction.
So today we're going to have a discussion around how blockchain privacy can really be demystified for financial institutions and fintechs. And as part of that conversation, I'd like to invite Dr. Ravi Chamarya, who is the co-founder and CEO at Zeeve, as well as Sankalp Sharma, who is the VP of Engineering and co-founder at Zeeve. And my name is Thomas Abraham. I'm the Chief Revenue Officer at Zeeve. So, Ravi, just to kickstart the conversation, before we dive deep into privacy, perhaps our users might be really interested to understand what are some concrete and relevant blockchain use cases that are of relevance for financial institutions and fintechs.
So financial institutions have been the early adopters in blockchain way back 1617. And we in fact were involved in quite a few POCs and pilots while working with banks. Now, over the period of last 7-8 years, a lot of use cases have been very well established. Some of the major use cases which have now we are seeing most traction in the banks. First is the real world asset tokenization. And real world asset tokenization covers quite a few use cases like tokenized deposits, tokenized funds, where we are already seeing quite a few deployments that have happened in production. Then we have tokenized digital securities that includes equities and bonds.
Yeah.
And then the second bigger use case is payments and settlements. And that is maybe cross-border settlements or within the specific geographies. So a lot of payments and settlement use cases are being done. And then stablecoin is forming the backbone in terms of, again, not just touching upon the payments and settlements, but also the tokenization use cases. And then we have some other use cases which are gaining traction like trade finance, where there were some earlier consortiums, but now we are seeing a resurgence of trade finance activities. So these are some of the larger use cases which we are seeing, whether it be institutions, banks, or fintechs.
No, absolutely. So Sankalp, I mean, there are some fantastic use cases now coming out for financial institutions. But are these use cases going to be driving adoption of custom chains or roll-ups for banks? Because today we see a lot of banks, in any case, making their assets available across various chains. So what do you see that trend, and what use cases are specifically driving the need for a custom chain?
Yeah, so I think I'll start with what 2025 has been for all of us in Web3, right? There has been quite a bit of a withdrawal that has taken place in industry in terms of the number of chain or solutions that were looking to have their own custom chains. And when something like that occurs in an industry, there's usually some good use cases that, show their strength of what they hold in terms of power. This came out of the place which was in discussion for a pretty long time. We've been working in this enterprise space for the longest of times. But we saw that this emerged very well, which was banking use cases and financial blockchain use cases. Custom app chains, I think, have a big role to play.
Yeah.
They are the only way of how you can connect to the larger ecosystem of Web3 while getting the same guarantees that you would get from traditional blockchain, public blockchain infrastructure. So dedicated blockchain infrastructure is a prerequisite for many of these use cases because of compliance needs, data compliances, processing, decentralization, control decentralization, and confidentiality. All of those bits are important for a typical financial use.